After talking to so many traders, I'm pretty much convinced now that most people don't struggle with the strategies, they struggle with the mindset or how they use the strategy in the market. Today we'll talk about exactly that, sitting down with Alejandro, and we'll talk about why your strategy might be working fine, but your results end up being quite bad at the end. Good topic, so I want to hear your thoughts on that.
So thanks, Etienne, for having me here. And I think one of the things that happens is that people tend to start a strategy. They may start trading with them, and they are unsure. They don't have the confidence that if the strategy is working or not. So they end up sabotaging themselves even if the strategy works because they just do not know if the problem is them or the strategy. And from what we have seen from many people that we have coached, most of the times it's them. It's the trader, the one that is wrong, not the strategy that they are following by itself.
One thing I see a lot, and I had this so much in my early trading journey too, is like when you look for a strategy online, you find something that's good, then you start to trade it, then you lose money with it. Then as soon as you see that, you move to something different. You move to a different strategy, different kind of teacher, a different edge. And all that jumping over time is very bad for your results because first of all, you change too fast. And you might be going to strategies that are good or tools that are good, but you don't really see them because you went too fast to these different tools. It's kind of something I see happen a lot too. You've been through that too before?
Yeah, I actually went through that at the beginning when I started to learn with price action trading. And at the beginning, you get, whenever you start a new strategy, you get that boost of like, okay, so it's something new, something shiny, and you start learning what's happening, what is the underlying information of the strategy, and you feel a bit more confident just because you are getting more information or learning more things.
Yeah.
But as you mentioned, when you get the first losing streak or you are doing this and it maybe from the beginning you cannot make it work properly, that's where you sometimes start losing the confidence. But what I have seen is that many times what I was doing was actually not following the strategy as taught to me by the instructor or as presented in the, you have your strategy document that you write. Once I started actually writing down my strategy in paper, I discovered that, well, half of the trades or more than I took last month that didn't work. They were not actually following what was in the plan in the strategy. They were doing something different, or I was ignoring some things willingly, or because I didn't have the consciousness of having my written plan. And that was something that was very detrimental. But once I realized that, it was really helpful for me because I started to stick more and focus on executing my strategy a bit closer to what it was, let's say like to the on-paper version of the strategy versus just, I kind of have an idea of what I'm supposed to do and I more or less do the things, but not really. That sometimes happened in the past.
So when did you stop kind of that strategy jumping and stick to something?
So for me, it took, I think the first whole year of my trading, it was a lot of strategy jumping. But at the beginning, well, I count it as the first whole year of actually trying to do something purposely, because for the first 6 months of my trading, I was mostly just opening the charts and just randomly trading. As in, I was looking at things and I was just like, oh, this looks like it may go up, it may go down. I had no idea what I was doing. So I kind of don't count that as part of, when I was trading. But after that, once I started to actually search how to, search online, how to trade, get to my location, trying to find a strategy. From there, it took me around 1 year of just going there and then sometimes just 1 week, try something new, sometimes a month, sometimes 2 months. And then the cycle started to be longer and longer in between I tried new things until I got more into price action trading. And that's where I actually wrote my first strategy plan in there. So I got price action trading, but not just with the chart patterns, but starting writing the things down. That's when it started, not necessarily to completely stop strategy hopping, but more of getting more focused into a process and having 2 or 3 core strategies that I will rotate from depending on the market context.
I did the same thing too. I went through like so many different strategies, and I also usually would try to go to a coffee shop, take out my laptop, and then start to trade there because I want to make money that time. It, of course, didn't work at all. But it's a good point. You also mentioned you decided to write down your strategy. Did you kind of create something yourself, or did you pick something you learned, or how did that strategy creation come about?
So in that time, the strategy was the ones I started actually writing them down. It was from a course. So it was just finding the strategy from someone else, getting it, and then write down the process which was part of what they recommended, was writing down the process so that you have something. The thing is, with price action strategies, most of the times, the way they are taught is they give you a big picture of the things, but they don't necessarily go all the way in detail into like, if this happens, then you do the next thing. It's a lot more of, if this relatively nebulous thing that has lots of nuances, or you have medium bad wood quality contexts or things in price action trading, if that happens, then you do this or this or this. So it was a bit more nebulous, and that's when I was like, okay, this is too many options. And I started writing down a more structured if then do this, and trying to define it better for myself. And that's when I started to see some of that process improvement, because I wasn't just having a list of too many options to choose when something happened, but I was trying to narrow or parameterize those price action concepts into a bit more of clearly defined buckets and clearly defined workflows. And that's when it hit the bit more stability in that part.
I think the first step into a strategy and kind of making it work is you have to, in some ways, make it your own and become the master at it. Like, you have to be able to understand when it works, when it doesn't work, and kind of just writing down your own rules, maybe tweaking a few things that make more sense to you. I think that's just the first step.
Yeah, I think that's very important, because you can get, I think with any strategy, you may trust the person that taught you or that talked to you about that strategy, but the way they use it may not work exactly for your situation or for your personality and for the way you are doing things. So it's very important you get the core from the person, and then you try to see how you can narrow it down, or how you can adapt those, what we call usually nuances, those small details, to better work for you. Just an example of one of our members that we got an email just yesterday. I was reading today in the morning the email. He was talking about how he's using one of our daily time frame strategies from the stock market hustler program, and he's using them in the lower time frames for day trading with lots of success. And he's very happy with that, and he just had to write to us and send us an email about how he has been applying them in a different way, and he just wanted to share. So that's a way, it's just an example of people taking the core of the process and then applying it in their own way, because they like to be more active traders, but they like the core of the strategy that they have for that longer term oriented strategy, and they just applied it into the daily time frame.
I read this book about checklists many, many years ago, and it really helped me to create a checklist for my own trading. I think it's called a checklist manifesto or something of the sort. I'll try to leave it link down below. It's a good book. But that idea was, and I know you do the same thing, is like you build a checklist for your trading, like what steps you have to go through and kind of what order. And the same thing like maybe surgeons do, that pilots do, is kind of same thing applies to trading, where you make your own checklist and you follow it, and that helps you stay consistent and kind of stick to your rules more. Walk me through how you do it.
At the beginning, I actually did it on those like really big trading plan templates. But as I started to do more and more, and then you have to run through the whole thing every single time you are placing a trade, because I was placing them in my journal. So I will first pre-journal a trade. So it was too much stuff. So I started to simplify it more and more. And it became not necessarily a checklist, but it became a small description of the strategy, because it was still trading price action. So it was small description of maybe like you have the context, and then from there you choose strategy A, B, or C. So the specific setup A, B, or C for that strategy. So it was more of you get this, and then you had these three options, and then afterwards, everything afterwards was just checklist based, as in you have these two options for stop loss. You can put in here, you select which one you are putting it, and it started to be all of those checklists, because it ended up becoming my journaling process, which is as the simplest it can be, that gives you enough information to analyze later, the better. And that's exactly what it became. It became I started to journal it, and I got my whole trading plan and then my journal, and I was like, okay, I can just add this bit into here. And my journal was almost a checklist, because that's usually the easiest way to write things down, like bullet points. And then from bullet points, okay, just take away the bullet point, change it for a checklist box in there, and then you can print it out. And then I had it laminated inside one of those plastic holders, so I could have a dry erase marker. I just literally every single trade, I could just go one by one, passing those parts there. So it was a very physical way of making sure I was following my plan as much as possible for that trade. And if I didn't, I had to physically leave spaces in my checklist. So it was a bit more, I had that psychological effect of helping you stick to what you are supposed to be doing with your plan.
Because otherwise it looks bad. You don't look like
Yeah,
you're
exactly.
doing your job. Yeah, definitely.
And then I used to take a picture after that, and then take a picture, save it for later, and then erase it, and then go to the next trade with that. Yeah.
Yes, that's good. We'll leave link below our one-page trading plan, which I think is a good way to start doing that. It's really being able to write down your rules on one page, and it's all organized where you know what strategies to trade, you know what time frame, you know when you should trade it, all that stuff. It's all on that plan. You can fill up for yourself. It's free to we'll leave that link below. The very first link will be for that. You can grab it, use it, and of course get good results with it. It's a good resource to get started doing that and having a checklist. What about the trader who's sticking to the rules? They have all that stuff. They have the checklist. They're following the plan, and they say, "Oh, my strategy still doesn't work. It's still losing money." How do you figure out what to fix in that case?
Yeah, so that's a difficult spot because sometimes traders say that they are following the things, and they may have their entry checklist and things like that, but more often than not, we see the execution and the compliance, to say it in a way, fail. Not necessarily now in the entry, because that's the first thing that once you get your trading plan and you get your checklist and you start following it, that's the thing that you are doing now correctly. But it sometimes fails in the part in which now management. Do you overmanage your trades? Are you moving your stop losses? Or are you ignoring some parts of your trading purpose? Maybe you have some filters which are based on market phases, and you are maybe purposely or a bit unconsciously kind of like being more lax with that, how you are doing that because maybe you haven't had any trades in the past week and you are, you start getting a bit desperate. And you don't necessarily write that in the checklist because maybe you are actually passing every single part of the checklist, but you're just like being a bit lax with the rules in there, and you are doing the things, but you are consciously or unconsciously leaving some of those parts out. Or the other part, which is very common, which is the over-managing the trade, getting scared when the trade is in other parts. So the first thing I will tell to people in that case is just switch to a set and forget, because that way you can know if your core strategy is working or not. And then after you switch for that, try to get under your journal or in your statistics at least 30 trades, so that you can start seeing like, okay, if I followed everything exactly as it's supposed to be, the core strategy, then will it still work, or is it losing money in that part, or is not working anymore in that part? So if after that, after making sure that you as the human are not messing up with the strategy and the core of the things, then you can see, if even after I reduce that or eliminate that part of the human factor as much as possible, if it still doesn't work, then that will be a case in which, the strategy is either not working right now, it needs to be either modified, or I may need to look for something different.
I'm going to say this as a general rule. If your strategy doesn't work with set and forget, it's not going to work without set and forget. It's not going to work if you manage your trades better. It's just not going to be good enough. But if you can make it work with set and forget, you put one target, one stop loss, you leave it there to run. If it loses, of course, it's fine. If it wins, it's fine. I think that's just the best way to test your strategy and your edge without kind of complicating things too much. So definitely a good point.
Yeah, I think that going the simplest way, simplifying that, it's a very good way to make sure that you're actually doing the stuff. It may be possible for the 0.1% of people or 0.01% of traders to actually work, like make a strategy of those edges without set and forget, and they don't work, but they actually make it without set and forget only with advanced management. But that is extremely rare. And the possibility that it's going to be you or it is going to be me, the one that is able to do that, it's very, very low. So when we are trading, we want to stack the probabilities in our favor. So we're trying to follow the things that are going to work for more people so that we can be one of those that are profitable, instead of trying to be the 0.01% case that only happens every 5 to 10 years that can make successful with those type of techniques or more complicated stuff.
Well, you mentioned a good point. You could be very good about the entry and completely forget about the exit. And the exit matters often a lot more than the entry.
That's a good point, Etienne. But one last thing that I want to mention when I was talking about knowing that your strategy doesn't work, it's the other part. Maybe the strategy doesn't work because it's not something that suits your style. Maybe it doesn't work, or it's maybe really hard for you to execute because maybe you are trying a scalping strategy, but you get very easily over into the overtrading stage of your mindset, or you can very easily get off tilt with those things. In that case, a scalping strategy may not work that well for you because you are going to be doing more of those management and those things that create mistakes. And maybe a swing trading strategy or something that is more long-term oriented and allows you to have that set and forget and just more calm overall trading profile will be more suited for you. And you can see this in almost all traders. Many people try scalping because it's very fun, it's very fast, but then they don't have success with it because it's the same thing. It's too fast. You cannot think properly and they cannot execute their plan, or they don't follow the things that they have. But sometimes they have more success with swing trading, or sometimes even just life. You have a job, you only have a few minutes a day to trade, you have 15 minutes, 30 minutes a day to trade. So you can go to higher time frames, to the daily time frame, and you have a slower trading, but that will suit you better. And what is better than having a trading strategy that may work but is hard to execute? It's just having a trading strategy that suits your style and that you can actually make money from it. Because it doesn't matter if you can make $10,000 in a week. What matters is if you can keep consistently making money over time in order to be able to grow your account. Doesn't matter if you make $10,000 if you lose them all in the next week. It's
Totally
as simple as that.
Totally agree. More cool stuff coming up with Alejandro. If you want to see how that is coming along, make sure you subscribe to the channel. There's going to be more videos in the next few weeks. And watch this video here on the screen next. If you think you'll like it. And we'll catch you back here in the next video right there pretty soon.